What happened to Amazon, down almost 15% after earnings yesterday, now a market cap of $1.25 trillion, on pace for the worst day since 2006. Shares of Amazon dipped as much as 14% on Friday after the company gave revenue outlook for the current quarter that fell short of Wall Street's estimates. It could mark Amazon's worst day since July of 2006 if the losses hold through the close. Amazon said Thursday it projects revenue between $116 billion to $121 billion in the second quarter, trailing the $125.5 billion average analyst estimate. Amazon's core retail business has stalled as a flurry of online shoppers tapers off amid the economy reopening from the pandemic. The company's operating expenses are increasing faster than its sales. Amazon invested heavily to staff up its warehouses and combat supply chain challenges, and now it faces rising inflation as well as increasing transportation and labor costs. And this makes sense in the macroeconomic conditions we're seeing right now, being the top holding in the consumer and discretionary ETF, with consumer spending being 1/3 of the US economy and US GDP unexpectedly contracting 1.4% in the first quarter. Are we in a recession right now with all the things that are going on around us? Inflation, the war, people not wanting to spend as much money, especially with monetary policy tightening as well. Although if you do go in the depth of why the GDP did contract, a big part of it is the trade deficit. So it's not all consumer spending. People are still spending money despite all the inflation. However, this isn't a good look for the overall economy. The second quarter forecast suggests revenue growth could dip to a range of 3 to 7% from a year earlier, representing further slowdown from the first quarter. When revenue at Amazon increased 7%, Amazon also lost $3.8 billion in the first quarter, compared with a profit of $8.1 billion a year ago. The company's investment in electric vehicle maker Rivian weighed on its profits. I remember last quarter when the earnings came out, I think the EPS was like $28 per share or something crazy because of Rivian going up so much, and then now it's the opposite. While sales were short of expectations by a mere $6 million, the bigger headline was the company's first quarterly loss since 2015 at a loss per share of $7.56, or nearly $16 shy of the street's earnings per share expectations. Under the hood, the company reported an $8 billion pre-tax loss related to its investment in Rivian Automotive. Recall the company reported a $12 billion benefit in the prior quarter relating to the investment. We estimate the company's earnings per share, excluding the investment-related loss, would be roughly $3.40, still 60% below consensus as the company continues to face headwinds relating to shipping, labor, excess capacity, and tough prior year comparisons. Amazon's cloud unit grew 36.5% year over year in the first quarter, a bit faster than analysts had projected. The cloud business results point to lighter but still brisk demand for computing, storage, and database services delivered from faraway server farms. Amazon Web Services revenue growth slowed from 39.5% in the fourth quarter. Meanwhile, AWS's fiercest rivals, Microsoft's Azure, Alphabet's Google Cloud Platform, have maintained constant growth or decelerated slightly. Amazon disclosed in its quarterly earnings announcement that AWS revenue totaled $18.44 billion in the quarter, above the $18.27 billion consensus. That works out to be about 16% of Amazon's total revenue. And the cloud isn't just another quickly expanding business for Amazon. At Amazon, cloud means profit. AWS threw off $6.52 billion in operating income in the first quarter, up almost 57% and higher than the $5.62 billion that analysts were expecting. Amazon's total operating income was $3.67 billion in the quarter, meaning that the overall business would have lost even more money were it not for the profitable AWS, whose operating margin widened to 35.3% from 29.8% in the fourth quarter. So for the better part since summer of 2020, we have been trading between 3,000 and 3,500, a couple times going to 3,700 and a few times touching 2,700, and we have completely broken that support. If we zoom out and take a look at the weekly, really we don't have any good support up until maybe $2,000 a share. So in the short term, there's a ton of headwinds when it comes to this company. But the way they're trying to set themselves up right now for the future, long term, you can't go wrong with Amazon. This is just the kind of environment where tech stocks, big multiples are getting completely annihilated. Eventually, Amazon's going to find that bottom somewhere, 2000 in that area, if we even get that low. But when this baby does turn around, it's going to be very, very, very nice and reward people that stayed patient in the long term. Alright, otherwise that's the end of my video. Thank you very much for watching as always. Let me know in the comments below what are your thoughts on Amazon's earnings. Let me know. As always, subscribe, hit the like button, and check out my description below for links to my Instagram, my Twitter, and my TikTok. I will see you guys in my next video.